Here, let's get our disclosures knocked out. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Information contained here in this webinar is property of Apex Investing. Trading decisions that you make are your sole responsibility. The information here is for educational and information purposes only, and not a solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. Past performance not indicative of future results. So like I said, tonight we're going to talk about picking the right spread, understanding spread premium and pricing, how the value of a spread works, and how to quickly find the right spread. All right, now if you've never traded spreads before, hop on over to nadex.com. You can go up here and you'll see the two different options, the two different products Nadex offers. They offer binary options and spreads. Right here you can read a little more information about spreads, and I'll show you where you can get some in-depth training on them as well. And right over here under the trading tab, go down to the second one here, demo trading platform. If you don't have a demo account with Nadex, go ahead and apply and get one right now. It'll just take you a couple of minutes. Fill out some quick information here and press submit. You'll get an email with a temporary password. You can use the username and password and log into the Nadex demo platform. They'll give you $25,000 of demo money. That way you can get familiar with the platform, get familiar with the different instruments they offer, how to enter and exit tickets and orders. And tonight we're talking about spreads, and you'll be able to go in and check those out. Right here you'll see indices spreads, Forex spreads, commodity spreads, and so on. Okay, and you can just click on any one of these and you'll open up the different Forex pairs, for example, and you can click on one and see the different spreads that are available and start playing with those a little bit. Test out, getting used to them, test out some strategies and systems with them. Okay, if you're brand new to spreads or to Nadex in general, also hop on over to our website. My name is John Skelton. I'm with apexinvesting.com. I'm not with Nadex. Apex and Nadex are two completely different companies, not owned by each other. Nadex is the exchange, and Apex, we're an online group of traders helping traders. We're an education company. But if you hop on over to apexinvesting.com, you can go right here to join free now. Select a username and password. Once you have that, you can log into our site and you can get a free basic membership here that will give you access to literally hundreds of hours of free education about trading everything, stocks, futures, Forex, CFDs, Nadex, binaries, Nadex spreads, and so on. Once you get over to our website here, a lot of good information. First of all, right here under the weekly webinar calendar, feel free to join us. We do these webinars with Nadex every Monday night, 7 p.m. Eastern. We also do some other webinars throughout the week and some radio shows. Feel free to join us on those. This particular, if you go right here to the questions tab, section number 2 here says Trading Questions Forum. This will take you to our forum. This is where a lot of good information is, okay? And you can come down here, and if you scroll down here a little bit, you can get to this S10 section right here. And this is all of our different systems. All right, you can go through and watch all kind of information, videos, screenshots, step-by-step training courses on all the different systems that we use to trade Nadex binaries and spreads. You go a little further down here and it says watch webinars here. This webinar that we're doing tonight is being recorded, and it will be posted right here under newest webinars. Okay, I'll have that up here in just a couple hours. If you missed any of the webinars from the last couple of weeks, feel free to go back and watch them here. Last week's, for example, directional trading with Nadex spreads. A couple weeks ago, I taught some information about some different in-the-money and out-of-the-money binary strategies. You can go back and watch all of these here. Also, if you're brand new to spreads, into that same section here of watch webinars here, you also see Nadex binary webinars, Nadex spread webinars, getting started with Nadex, a whole library collection of free information in there to go back and learn all kind of good information. For example, if you want to learn how to trade spreads, right here, this is the video you want to watch. The ins and outs of Nadex spreads. This breaks spreads down step by step, helps you understand how they work, you know, what are the different options, directional trading with spreads, how to use them with our sharpshooter system, the ultimate hedge strategy, all kind of webinars in here about Nadex spreads. Okay, so feel free to check those out. Also, if you're on our homepage here, another area you might want to look at is right here under the Binary Essentials tab. Get some information here about, you know, our whole world of binary essentials and what that is. And then right here, number 3, trading system courses. Okay. And we've got some step-by-step training courses here. All that is free information that that you can check out. Okay. Thomas says, I now have a live and demo account. Do I have to give up the account? If you have a live, okay, Nadex will give you a demo account, a free demo account for 2 weeks. Okay. Once you open a live account with Nadex, there's only a minimum of $100 to open an account with Nadex. Once you open a live account with Nadex and you place your one live trade, doesn't matter whether it's an $80 risk trade or a $2 risk trade, doesn't matter. Once you've placed one live trade with Nadex, you can give them a call and ask them to extend your demo account out for a year, and they will. That way you have both a live and demo account. That way you can be trading in your live account, testing out some new strategies and systems in your demo account till you get those down and mastered. Then you can, you know, start trading that strategy over in live. So no, you don't have to give them up. You can have both of those accounts, Thomas, and that's great. Okay. Dan, do you have time tonight to take some? We'll see, Dan. I may not. We've got very limited time here tonight before someone else has to use the system. Let's see how far we get, though. Otherwise, go ahead and pop them in there, Dan, and I'll see if I can get to him here. And if not, I'll have you hit me up over on the Apex site, and I can get them answered there for you. Okay. If I can't get to your questions tonight on specific spread strategies, hop on over here to the Apex website. Right here under the questions tab, the third one down, help desk, tech support, and billing. Right here, submit a new help ticket. All right. If you submit a help desk ticket and address it to me to say, hey, question for John from the webinar, they'll assign it over to me, and I can go through there and get them answered for you, direct you to the right strategy or system or forum post or screenshot or whatever we need to do to get you handled there with your questions. Okay. Let's see here. Abdul, for your question about the daily deviations, right here under active Apex investing courses. Okay. Right here, setting up NinjaTrader, data feeds, and the toolkit. If you go through these steps here, the fourth one down shows you how to activate that. But you need all this stuff here. You need to install this stuff here, and it's all free to install. And then right here shows you how to get that. Okay. So under questions, active courses, it's right there. All right. So again, if you don't have a free demo account with Nadex, make sure to get that. Hop on over to our site, get a free username and password. That way you can get access to all this free information, literally hundreds and hundreds of hours of free information and education there. Another thing that you're going to want to take advantage of on our site, and I'm going to show this to you a little bit later, and show you how we use it. But right here under scanners, the second one down, well, first of all, you have to activate it, and it's free to use this. This is a free tool, okay? You have to activate it, but right here under scanners, and then you go here and click scanner. This is really neat. Let me show you this. You're going to definitely, after tonight, what I'm going to teach you tonight, you're going to be using this every single day, every single time you trade spreads. Paul, you're saying you can't see the screen. Everybody else says they can see the screen. Okay, so if you're having trouble seeing it, you might have to log off and log back in. And everyone else is confirming that they see the screen here. So maybe hop off and hop back on. It looks like everything from this end and from everyone else is, yeah, everyone else is confirming it's all good for them. So you might just have to pop right back on here, okay? Right here under the spread scanner. And some of you are like, what spread scanner, what is that? Well, let me show you something real quick here before we hop in. And you'll be able to understand this. If I want to trade spreads, all right, and I'm on the Nadex platform here. Let's say that tonight I want to trade some Forex spreads. I want to trade Aussie dollar spreads. Okay, well, I've got spreads right now. Spreads that opened up at 6 p.m. and they go all the way to 11 p.m. and they're 200 points wide. So I click that, okay. I've got 3 different ones to choose from, right? I've got 3 different spreads, 3 different floors and ceilings. They're priced a little bit differently here. Okay, so I've got all those. Great. Now I've also got some that are 6 p.m. to 8 p.m. So let me check those out. All right, so these are floors and ceilings. Here's price. Okay. I've also got 7 to 9, 3 different ones, total different floors. Wait a minute. Now, what were the 6 to 11s again? Let me go back. I'm going back and forth here trying to figure out which spreads do I want to pick. Which spread do I want? What were the different floors and ceilings? Wait, where was it priced at? How close to the market? I'm going back and forth here trying to figure this out and do math. And, you know, I've got my chart up and I've got a possible potential entry coming up and I want to pick a spread. Which one do I pick? I'm going back and forth here. And I've got the daily one. It might take me 10 minutes to figure out which spread I want to trade, and the market's already moved a good amount, right? Okay, well, that is what we have the scanner for, okay? And this is the Apex proprietary tool that we have made. All I have to do is come in here and say Aussie dollar, boom. Everything's on one page right here, okay? All the Aussie dollars are on one page right here. See the ones that are expiring at 8 p.m.? There's those 3. The ones expiring at 9 p.m., here's those 3. The ones expiring at 11 p.m., there's those 3. And the daily. All right in front of me. Show me the floor and ceiling of the spread. And then off right here, this is the offer. Here's what I can buy it for. Here's what I can sell it for. And it's all right here in one place for me to see. I'm not having to go back and forth and figure out what's going on. What are the different spreads? See that? And then you also have to do the math, right? You're like, well, how much margin do I need to do that spread? So if I'm looking at one of these spreads and I'm right here and I want to sell it, quantity of 1, okay, my max loss is 96. Okay, so I got to type $96 a contract for that spread. Well, what about this spread here? If I want to sell this one, okay, that's only $6. Okay, now let me go to the next one, and I'm clicking each one of these, filling out a ticket, right? Trying to figure out what the loss, you know, what the margin is going to be. That's taking me forever, right? On the scanner, it's right there, right? Red is margin and max loss. Green is max profit. Max loss, max profit, green and red. Okay? All easy cheesy right there. Does that make sense? How much easier that is to use when you can see them all in one place. You automatically see green is potential reward, red is potential risk. It's all right there in one place. Okay? If I also want to trade euro dollar spreads, I just click them and boom, they all pop up too, right there. Okay? I can log in on another browser into my demo or live account and have access to it. And I can straight from the scanner click this ticket, boom, pops up a ticket, places my order. Done. All in one place. Okay, instead of having to go back and forth all over the place. So I'm going to show you some other cool ways we use the scanner. But again, that is a free tool. All you have to have is just a free username and password to the Apex site, and it's under the scanner section there. It's an amazing tool that you want to use. Okay, so take advantage of that as well. So let's hop in here real quick. For those of you that weren't with us over the last few weeks and we kind of covered the basics of spreads, I'm not really going to go into it in too much in depth tonight. If you want to catch up on that, feel free to watch some of last week's webinars, but I'm going to do a real quick kind of 5-minute review of spreads here so that we can tie it in to what we're going to talk about. Basically what a spread is, Nadex calls them bull spreads. We call them box spreads. They look like a box. Spreads have a floor and a ceiling. So for example, let's say this is a euro dollar spread, the floor is at 1.2400, the ceiling is at 1.2500. Okay, spread is the difference between the floor and the ceiling, which is technically in here 100 pips or 100 ticks between 2400 and 2500. All right, spreads move in pips or ticks, which is the last digit quoted, and each pip is worth $1, and there are 100 pips in this spread. Okay, so if I'm going short, I want to sell a spread, I'm saying the market's going down. Well, I can't make additional money below the floor of the spread. I can only make money down to the floor of the spread. So if I'm selling it saying it's going down, but I'm wrong and the market goes up, I can only lose money to the ceiling of the spread. So my risk is capped. The market could go against me hundreds of points, but it doesn't matter because I'm capped for my loss at the ceiling. So say, for example, I was selling this spread at 24.90, saying the market's going down. Well, the ceiling is 2,500. I'm selling when the market's right here at 24.90, so it's 10 pips difference, right, between where I'm selling and the ceiling. Each pip is worth $1, therefore my maximum risk, the most I can lose on this spread, is 10 bucks. Because it goes against me, I'm only going to lose money to the ceiling. So my technically my max risk is 10 bucks here. My max reward, if it went all the way down to the floor and I got out, would be what? 90 points, right? Because I sold it, or 90 pips. I sold it 24.90. It can go all the way down to 2,400. I can make 90 pips or 90 bucks. All right. The opposite is true for buying. If I buy, say the market's going up, I can't make additional money above the ceiling. But if it goes against me, I can't lose additional money below the floor. It's capped risk and capped reward. So if I bought right here at 24.10 and it goes against me, it's only 10 pips, 10 ticks, $10 to the floor. The most I can lose then is $10. And I have a maximum profit potential if it goes all the way up of 90 pips or ticks, therefore $90. And I can close it at any time. When you get into a spread, spreads have expiration times. All right, so when you buy or sell a spread, you can either exit the spread at any time. If I bought right here, I can get out of it here, 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 anywhere. I can get out of it any time. Or I can hold it till expiration. And if I hold it to expiration, it will close at the settlement price at the time of expiration. Meaning, if I bought right here for 24.10 and I didn't get out of it up here or down here, I just let it expire, and it expired right here at, say, 24.80, then I'm going to get the difference of where I bought it, 24.10, compared to where it expired, 24.80, which would be 60 bucks. I might not have gotten my max 90 because I didn't get out of it up here. Just because it hits a floor or ceiling, it does not automatically close the trade. You either have to close it or it will close out on its own at expiration. Okay, so that is the basics of a spread. Now, spreads, like I showed you, there's different spreads. There's spreads that can be as long as 22 hours. Spreads can go all the way to tomorrow afternoon. There's spreads that expire every 2 hours. Okay, there's several different spreads. And this right here may be a little confusing, but let's say that a spread's going to open up at 7 o'clock. Well, how does that work? Well, let's say it's 7 o'clock, the market's at 1.300. Well, there's going to be a spread, for example, that's 100 points wide, starting at, well, let me just, you know what, let me show you on the platform here, because sometimes it's easier on the platform. Okay, these Aussie dollar spreads, 6 to 8 p.m. So at 6 o'clock, these spreads opened up. 3 different spreads. Now, who can tell me what the Aussie dollar approximately was at 6 o'clock without looking at a chart? Can anybody possibly know how to do that? Do you know what the Aussie dollar was at 6 o'clock without a chart? Yes, you do, because you can tell right here with these spreads. People ask, how are spreads determined? Why is there different floors and ceilings? The Aussie dollar was at 70.40 at 6 o'clock. How do I know that? So right here. All right. See where it says 6 to 8 p.m., 100 points. So these spreads are 100 points wide. So at 6 p.m., the market was at 70.40. So what do they do? What does Nadex do? They create 3 spreads. They create a spread that has a ceiling of 70.40 going down 100 points to 69.40 as the floor. Okay? Then they also have another spread where 70.40 is the floor and going up 100 points to 71.40. Then they have one right in the middle where 70.40 would be right in the middle with 50 points up and 50 points down. Does that make sense? Why there's 3 spreads? and how they determine those three spreads. Okay, so that was at 6 o'clock, 70-40. At 7 o'clock, okay, so those spreads went from 6 p.m. to 8 p.m. At 7 o'clock, another 2-hour spread opened up that goes from 7 p.m. to 9 p.m. Where was the market at 7 o'clock? 70-50. So what did they do? They did the same thing again. 70-50, 100 points down, 70-50, 100 points up, and then 70-50 being right in the middle. Here's a perfect example. See, this spread is 7,000 to 7,100. Why? Because 70-50 be right in the middle. All right, does that make sense how they come up with those spreads? So what does that mean? That means at what? 8 o'clock, there's going to be another spread that opens up, a 2-hour spread that goes from 8 to 10, right? And it'll have a different floor or ceiling. So I've got different spreads to choose from depending on what strategy or system I want to use. Am I looking for a spread that's close to the floor or ceiling? Am I looking for a spread that's right in the middle? I'll always have options, okay? And I also have the big daily spread that I can get into right now that doesn't expire till 3 o'clock tomorrow afternoon. And this is a huge spread. Look, 67.90 to 72.90, okay? It's like a 500-point spread. So I've got 500-point spreads, I got 100-point spreads, I got 200. So I've got all kind of different options. So what happens if I get into a spread? Let's say I'm buying one of these spreads right here because I think the market's going up. And the market it's going up, 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 up. And then my spread expires. And I made money. But the market is still going up. What can I do? I can just get into another spread, right? And I know another spread will come out here at 8 o'clock. I know I've got spreads right here that go to 11. I know I've got a big spread here I can always get into and follow the market up. Yeah, I might have to put up a little more money to get into this one, but I've always got a spread available no matter what, okay? With different floors and ceilings and different expiration times. So basics of a spread are easy to understand. You got a floor and a ceiling, you've got capped risk, up or down. It's $1 per tick or per pip, okay? So we've been through all that. That covers the basics. Now, I want to talk about a couple things here real quick, that the few things that seem to slip people up about spreads, okay? And the first thing is max risk, okay? Don't be confused by that. We've talked about this before. Some of you are binary traders. If you're a binary trader, forget everything you know about binaries when you are trading spreads. They work nothing like binaries. Binaries are all or nothing, all right? 1/10 of one tick can cause your binary to lose. And you can go in here and pick a binary on the Nadex platform, right? And you'll click it and you'll say, okay, I'm going to buy this binary right here. I'm going to buy it. Boom. And you see this, max loss $86. And that freaks you out, right? Because you're like, man, it's all going to come down to 1/10 of a tick and I can lose $86 like that. Out of nowhere in just a second. And you don't like to see that, right? And you go for one of these cheaper binaries that are out of the money, that have a lower probability, and it's not always the smart thing to do. But everybody gets so concerned about this number right here, max loss, because you know that you could lose all $86 in just a second based on one tick, right? So if you're a binary trader and you're used to that, and you come over here and you start looking to trade spreads, you might pop in here and pop one of these spreads right here, and you'll say you want to buy it, and you see $132 right there. And you're like, oh, forget it. It's too expensive to get into spreads. There's too much risk. Okay, well, a spread works $1 per tick. This is just all this is the amount of money that you have to put on hold out of your account to enter in this trade. And then what happens? As the market moves up a tick, you're making $1 a tick. If it's going against you and it's moving down, you're losing $1 a tick going down. This is not like a binary that just a tick or two is going to cause you to lose all this. You're not going to sit here and hold this spread and watch it go down against you 132 ticks, are you? No. whatever your strategy or system is, you may have a stop of, hey, I think the market's going up. My indicators and strategy or system are telling me the market's going up. But hey, I'm wrong, it's going down. And it's moved down against me 25 ticks, 30 ticks. Like, that's a pretty good amount for the market to go against you in the wrong direction. It's 30 ticks, right? Well, if it went down against you 30 ticks and you're wrong, you could just get out. And how much would you lose? 132 bucks? No, you lose 30 bucks. If it's going down against you 30 ticks, you only lost 30 bucks. As opposed to a binary that you buy for 80 bucks, it goes against you by 1 tick at expiration, you lose all 80. So people get so worried about this max loss number thing, and it's too expensive to trade spreads. It's too risky to trade spreads. I can't afford to lose that. Well, that's not your realistic loss amount. That's only your realistic loss amount if you hold something and just watch it go 130 points against you, okay? Which you should never be doing with any strategy or system. If it's going against you 20 or 30 points or wherever your stop is, you get out. So you actually have a lot less risk with spreads than you do for binaries, okay? Dave, thanks, John. So I guess there's always a spread that you can enter for your trading. Absolutely. I mean, right here, we've got these different ones, 6 to 11. We've got these 6 to 8. We've got these 7 to 9. Or we've always got this daily, okay? We've always got the daily. So Dan says, but it might turn around. LOL. Yeah, it might turn around, but it might not. If it's going 20, 30, 40 points against you and you get out, well, it could have kept going against you and you lost a lot. But if the market turns around and starts going back up, what could you do? Just hop back in a spread. You can hop right back in. You're not losing 70, 80 bucks at a time because it's fluctuating on you by a couple of ticks like a binary. It's just $1 a tick, okay? So just wanted to clarify that a little bit. You can exit it early. Max risk is not always your true risk you will take on. It's max risk versus realistic planned risk with stops in place, okay? Yeah, you might tie up a little more of your account to trade it as opposed to a cheap binary. You might have to put up a little bit more on a spread, but again, that was just an example of one spread. I mean, you could take this spread right here and say we want to buy this spread. It's only tying up 9 bucks. Okay, so I mean, there's different spreads. All right, and again, on the spread scanner that I showed you earlier that we use, it'll show you that right then and there. You can see all the spreads right here, and you can see right here the numbers in red is the amount of money you'll be tying up as margin. It's right there. Okay, so all right, let me just check out a couple questions here. John, I'm not sure what you mean by how do you monitor value in Apex. Not quite sure what you mean by monitoring value. Michael, should you only pick the shorter term expiration to avoid the time factor? No, not necessarily. That's one, I mean, depends on your exact strategy or system. I mean, that's one of the nice things about some of those longer spreads is you have more time to be right, you know, and it can kind of fluctuate up and down, but you can get in a shorter term spread and then just get into the next shorter term spread as well. You can do that, okay? Rob, there's not stops. You can't put stops on Nadex tickets. You can put take profit orders, but you can't put stops. Okay. Let's see here. And the scanners are just the red and white boxes. John, I'm not quite sure what you're asking there, John. I'm sorry. On the scanner here, the red and white box, that's just risk and reward, these right here. Is this what you're talking about? The red and green? That's just showing you risk and reward so you don't have to click on a ticket over in Nadex to figure it out. It does all the math for you right here. Okay. Okay. Yeah, Dan, there are some triggers on the scanner there. Can't really get into that right now tonight, but feel free to ask us over in the Nadex or in the Apex pit. this is a Nadex webinar tonight, just as far as some education on spreads and how to use some of the free tools. But yeah, ask us over in there. We can get that for you. Okay. So let's keep moving here. We got to stay on track. So that's risk and reward. All right. Now, showed you the scanner as far as how to quickly find the best spreads. Shows you all the different spreads right there in front of you. You don't have to search back and forth. But what is proximity? Okay, I want to talk to you about proximity for a minute here. If you look on the scanner, so you've got your floor and ceilings of the spread right here. Here's what you can buy the spread for. Here's what you can sell the spread for. Okay, spreads, depending on the spread, not all spreads are priced exactly where the market is. Meaning right now the Aussie dollar indicative is 7042. Well, this one you can buy at 7045, this one is 7055, this one's 7038. There's all kind of different spreads. There's different floors and ceilings, and there's different pricing on some spreads. Some spreads have a little bit of premium built in that you can buy the premium or you can sell the premium. I'll explain that here in a minute. Normally, the spreads that are right close to the floor or ceiling will have a little bit more premium in them, sometimes just a few dollars, sometimes more. A lot of times your middle spreads are the closest ones, and your middle spreads move exactly with the market at $1 per tick. Okay, if you get into a spread that's not priced exactly where the market is right then, it may take a little bit of movement before that spread starts moving at $1 per tick. Okay, and we're going to talk a little more about that. But right here on the scanner, it says proximity. We got buy proximity, sell proximity. See right here, it says +3, +3, -7. All that is saying is the current market is right here, 7044. Well, this spread, if you want to buy it, you have to buy it at 7038. All right, so the price of where this spread is priced right now is 7 ticks lower than the current market. This spread here is 2 ticks higher than the current market. And on the Nadex platform, you have to go in and do all that yourself. Okay, well, the market's at 0752. I can buy this one 0759, 755. You got to do it all. But right here on the scanner, it just shows it for you right there. How far away is the spread? Okay, so this proximity is the difference of where you buy or sell compared to where the market is currently trading at. Okay, so for example, last week I showed you some examples of one of our favorite systems that we use here at Apex called our iZone Sharpshooter as far as how to trade spreads. And what we're looking for is all of our indicators to be green, bouncing off one of these green eye zones, saying that the market is going up. Okay, well, if I get an entry that the market is going up, for example, and I want to buy into a spread, then I'm like, wait a minute, the market's moving, tick, 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 but I'm not making $1 per tick as the market moves. Well, but if you wanted to enter right here, but you bought a spread that had a proximity further away up here, well, the market's got to move and get up there before that spread's going to really start moving with you at $1 a tick. Does that make sense? If I'm wanting to enter right here, but I buy in at a price up here, the market's kind of got to get up there to it for it to start moving at $1 a tick. Okay, and that's why this here shows you that proximity. Okay, like if I'm going to sell something, but I'm selling 12 ticks below the market's got to get down there and catch up with it before it starts doing $1 a tick with me, in a sense. Okay, does that make sense? So I know some of you said, hey, I go in and I want to trade spreads and I just find the cheapest little spread I could, and it's not quite matching up for me $1 per dollar just yet. Well, the market has to catch up with it. Okay. Now, Dan, you wouldn't want to wait to enter because that spread's going to move in price as well. Okay. If that spread is, let's say, 11 ticks below, well, when the market moves 11 ticks, if you want to get into it then, it's still going to be 11 ticks difference. So you can't wait. It doesn't work like that. That price will move with it, okay? Or you can just go with a spread that's right at the market and will automatically start moving, okay? Now, why would you want to do something like this? Why wouldn't I just take this spread right here as opposed to taking one of these other spreads where I'll have a little more room? Well, because this one goes to 11 o'clock. This one's about to expire here in 20 minutes. So you might want a little longer one, or you might want to get into this one, and then as soon as it expires, get into another one. It all depends on your strategy or system, okay? Now, the daily spreads right here are always going to be the closest ones. They're the ones that are going to mimic the market the closest, dollar for dollar, and move with the market, okay? Now, sometimes they can require a little bit more money tied up to get into them because they're wider spreads, but they're going to mimic the market the closest of dollar per tick, okay? But the point is, you don't have to figure all that out. Right here on the scanner, it's all given right there for you, proximity, okay? So that's proximity. Basically, positive proximity means you're buying or selling above the market. Negative proximity means you're buying or selling below the market, all right? And the spread can move slower based on the size of that number. If you're buying or selling, you know, pretty far away, you know, the spreads are going to move a little bit slower, all right? Spreads move slower the closer to the floor or ceiling they are. That middle kind of 40% of the spread moves the fastest dollar per dollar one-to-one. Like the top 30% or the top 20%, the bottom 20% may only move like 0.7 to 1, or it might take you a couple, you know, 2 or 3 ticks to get a 1 tick in movement. They move slower there. So if you want to mimic the market as much as possible, dollar for dollar, okay, you want to take one of the daily spreads or the wide spreads, okay? And then guys, I'm kind of breezing through some of this pretty quick just to give you the basics. If you really want to understand this, again, if you're on the Apex website, go to questions, trading questions forum, and go down here to watch webinars here, Nadex spread webinars, the ins and outs of Nadex spreads. We really go through and break this down step by step in broken out videos. Exactly how proximity works, exactly how premium works, show you some live trades, show you some settlement emails from Nadex, exactly how it works, okay? We get a little more in depth into this, okay? We don't have time tonight to go through it and spend hours on it. I just want to briefly cover it with you to give you an idea and maybe have a few light bulbs go off or a couple of aha moments of, oh, that's what I've been doing wrong there. And if you want to dig in and learn more, you can check that out, the ins and outs, okay? Let's see here. Let's double check here. Rob, what I mean by trail with predictors? If you check out last week's webinar, Rob, I kind of go through that and cover over that system. Tonight we're not really getting into that particular system I was showing on the chart there, just talking about the spreads, but I do cover that if you want to catch up on last week's webinar. Let's see here. Ozzy, we're not covering butterflies or iron condors tonight. David, we are going to talk a little bit about premium here in a minute. Not really going to get into iron condors, but do I have to consider proximity on the spreads that have positive premium? David, you're mainly looking at the premium there, okay? Not necessarily the proximity. You're looking for the premium, okay? Wasu, what time frame do you use for trading spreads? Not sure exactly what you mean by time frame there. I mean, for me, when I'm trading spreads, I'm wanting as much time as I can get. You know, for example, let's say I was trading tonight, okay? Well, I know I've got some spreads that are, that's the other reason this is so important, the spread scanner, to see it all together, okay? Because let's look at something here. Well, I want to trade these Aussie dollar spreads tonight. And let's see here. I'm looking at, ooh, I like that. I only got to put up 46 bucks. And The market's only 3 ticks away on proximity. That's pretty close. I want to get into that spread. I like that. Well, but I've also only got 16 minutes left till expiration. Okay? But, okay, look right here. Only 3 ticks away. This one's only 3 ticks away. And it's only 58 instead of 48. So I can put up an extra 10 bucks in margin to get what? A whole nother hour out of this trade. Right? So why would I not want to do that? What I'm looking for is the longest time frame I can get to be right. Okay? But still get a, you know, a spread that's pretty close by, and, you know, still want to be watching what I'm putting up in my margin. So, I mean, I'm looking to get as much as I can. Now, let's say that I'm going to be trading something, you know, say I'm a news trader and there's some news events coming out tonight at a certain time, and I'm just looking to take advantage of, you know, the move on the news. Well, then I may be fine with a smaller time frame spread. I don't really need something that's going until 3 o'clock tomorrow. I'm just looking for a spread that's going to take advantage of, you know, the next hour of the move of the news event. I mean, you know, it really just depends on what strategy or system I'm doing, you know, as far as what spread I want. But I normally want to get as much time as I can. Okay. Zach says, what does ITS or OTS mean on the spread scanner mean? ITS means in the spread. OTS means out of the spread. Okay. What does that mean? Right now, the market's at 7044, right? Well, see, this spread has a floor of 69.40 and a ceiling of 70.40. So the ceiling of this spread is 70.40, but the market's outside of the spread. It's up at 70.44. Okay, so that's out of the spread. Does that make sense? Okay. All right, so that's proximity, where the spread is priced. Okay, where the spread is priced compared to where the market is. Okay, is proximity. Are you buying or selling? Well, like I said here, you're buying or selling below market or above the market. That's pretty simple. Okay, so, and just like a binary, like if any of you are binary traders, let's say you buy a binary for like 40 bucks and it starts going up in your direction, it gets up into the 90s, it starts moving really slow then, right? Like it just kind of hovers there like 92, 94, because, you know, it's close to expiration, or when it's up to its almost max profit potential of 100 bucks, it doesn't move very fast. Spreads can be the same way. They can start slowing down the closer to the floor or ceiling they get. That's what we call the Greeks with your, it's how options work with your gamma and delta and theta and delta and so on. But we don't need to get into all that. You just have to know that spreads move the quickest in the middle. All right, so premium. Some people are asking about premium. What is premium? Do I pay or lose premium at expiration? Okay, well, what is premium? Well, the best way to understand premium is, you can explain it a couple different ways. You can explain it as being insurance that you pay, where you're paying a little bit extra to have coverage. If you're, you know, paying for an insurance policy in your house, you're paying that insurance policy each year to have your house covered. All right, premium is, well, really the best way for me to explain it is let me get on to the next slide here. The question is, do you want to pay premium or do you want to collect premium? Okay, now there are some different strategies with spreads that we use, like called iron condors, that we use to collect premium on. Okay, we're really not talking about iron condors tonight. Just there is ways to collect premium there, even if the market doesn't move. Okay, but basically the difference of where you bought or sold compared to where the underlying was at expiration. Okay, what do I mean by that? Well, let's take a look here, and I'm showing you an example on this scanner. All right, you see this section here, buy premium, sell premium. So this is the buy side, this is the sell side. So you see right here, -22. Okay, what does that mean? Well, look at this spread. This spread is from 44.95 up to 45.05. Okay? Where's the market at right now? 44.92. Well, what this is saying is, well, you can buy this spread for 44.97. Well, the market's at 44.92. So if you buy this at 44.97, you're buying it above the market, right? So the market has to do what? The market has to move up just to get there, right? Just to get there. So, but look, you're like, ooh, I only have to put up 22 bucks to place this trade. Boom, I want to take that trade. Well, all you're looking at is max risk here. You're not looking to see, well, where is this spread actually even at? The market has to actually move a good bit before I can even start making money. And then you turn around and say, man, I tried those spreads, but the market moved some. I didn't make a whole lot. Some of you have been with us when I've talked about binaries, right? And I've talked about using the in-the-money binaries as opposed to the out-of-the-money binaries. We all like those out-of-the-money binaries because they're so cheap, right? When you all look at those out-of-the-money binaries, you hop over here and you're pulling up Forex binaries and you're like, ooh, look, I can just risk 22 bucks and buy that binary. I want to buy it. And remember what we've talked about? Where is that binary at? Where's the market? 0753. Where's this binary? 0760. So the market has to move all the way up there for this binary to be worth anything. And some of you wonder, man, how come I never make any money? Because I'm going and I'm just buying these cheapy ones. I'm not paying attention to strategy or systems or probability or premium. I'm just looking at a cheap risk and I'm taking it. It's the same thing with spreads that you're doing. You're looking at a cheap risk saying, ooh, I only got to put up 22 bucks. I'll do it. And then you complain of, well, the market moved some, but I didn't make any money. Right, because where did you buy it? You bought it at 44.97. The market was at 44.92. So the market has to move up to 44.97 before this thing really starts even moving a dollar per tick. You bought it higher than the market, and it has to move up there. So it's not going to move a dollar a tick till it does. That makes sense? You're buying above the market. But now look at this. What is this down here? Okay, let's look at another one. Let's say, oh, okay, I want to take one of these longer spreads out to 415. I want to have more time to be right. So let's see here. Ooh, I don't want to put up 300 bucks. I don't want to put up 400 bucks. Okay, 90 bucks. I'll take that one. Because I only have to put up 90 bucks to get in it. That's not too bad. All right. Where are you buying it at? 44.99. Where's the market? 44.92. When you buy it, you're saying the market's going up. So the market has to go from 44.92 all the way up to 44.99 before this thing starts moving a dollar a tick. You bought it 67 ticks below. You start off with negative $67 of premium. And why did you do that? Because it looked like it was a low risk trade right here, and that's all you were paying attention to, as opposed to the whole picture. And so then some of you will send in a help desk ticket to us saying, well, you know, what's going on here? I mean, the market moved like 40 points, but my spread value only went up like $10. I thought it was supposed to move a dollar a tick. It went up 40 points. I can't make any money with these spreads. Well, not when you're buying that one. Not when you're buying something with negative 67 in value or in premium, and the market only goes up 40 points, right? Because see, you're buying at 44.99, but the market's only at 44.92. Okay, and I think a lot of you, and I was guilty of this myself too when I first started trading spreads, because I didn't understand them. I did not pay attention to what is proximity and what is premium and what does my chart telling me to do. I was just simply looking at max risk and reward. I wanted to go with the cheapest thing I could. Okay, but now look at this one. DITM, deep in the money. ITM means in the money. Look at this one. $66 of premium. Positive. What does that mean? Well, it means right now the market's at what? 44.92. Where can I buy this spread at? 44.83. So I can buy it way below the market. So automatically, if I get into this spread, I'm getting in there, buying it so far below the market that at expiration, as long as the market stays where it is or goes up or even goes down a little bit, I can still make money. Let me show you an example of what I mean by that. Okay, we're not getting into charts and systems and indicators here, okay, so we don't have time for that tonight, but let's just say that this was the system I showed you last week, right? Bouncing here, coming up off an I zone, boom, right here, everything turns red. So we're going short, we're going down, okay? So let's say the market, let's say our entry was right here at, let's just say 16,670 was where I wanted to get in and sell. Well, let's say that I could get a spread, I could sell a spread with positive premium, and I could sell it up here. Well, what happens when the market comes all the way down, and then it expires? Say it expires right here. Well, I sold right when the market was right here. So I should get from where I sold to where it expired, right? Well, just because I entered when the market was right here, that doesn't mean I sold the spread there. I sold the spread way up here that had all this extra premium built in that I would get to keep. Or if the market came back up against me and even went above 1670, which was at the time I got in, I still get to keep from wherever I sold it to wherever it expired, because I was able to sell above the market. Or if I wanted to buy, if I could buy below the market, who doesn't want to do that, right? If you can buy below the market, that's just extra premium you could make. Okay, and that's, I can easily see right here. The market's at 44.92. I can buy into the spread at 44.83. And we know how spreads work at expiration. What do I get? The difference of where I bought compared to where it expires. So if my chart, my strategy, my system's telling me the market's going up, and I have see a spread where I can get into and have premium, or I'm not buying it in at 44.92, I'm actually getting in at 44.83, way down there. That's just extra that I can make. So I can have an option to either, if I'm looking at this scanner and understand what I'm looking at here, I can either pay premium and get into a spread where I'm going to have to make up 67 bucks, right, and have the market move quite a bit, or I could collect premium, right, and I can see that very easily here. Now, granted, I've got to put up more money to get into this spread, right, because it's a bigger distance to the ceiling. Here, I got to put up less money. So some people will say, well, why would I ever want to go for a negative premium spread? I'm not saying that it's bad to use those, okay? Because yes, you can get into them a little bit cheaper, and therefore you could do more of them and make out very well with a big move, okay? But you can see it right there very easily, the positive or negative premium, okay? And it's up to you whether you're going to buy or sell premium, okay? Now, some days there's higher premiums. This right here is an example of NQ, the NASDAQ, all right? Now, certain volatile days, or if there's news events coming out or earnings reports coming out, can cause there to be more premium built into something. Okay, you're not always going to find premiums like this every single day on every single instrument. Okay, like if you're looking at some new stuff coming out, like Susan's asking it, well, what's the best FX charts to expect to collect premium on? That just depends, and that can change, Susan. A lot of it has to do with news events. Check out the news calendar and see which pairs have news that will be affecting them that night, and that's usually when you'll find some little higher premiums. Okay. Indices, the same thing. When there's some news coming out or there's a lot of movement, you can have those as well. NQ is probably my favorite of the indices, Susan, because they have very tight spreads and they have some good premium built in. The other thing is, let's see here. Like right here. Okay. See this one right here? So I showed the example of here's some negative premium, real cheap. Here's some positive premium, but I got to put up a lot. But look at this one. This one's only a few bucks of premium, and it's only one tick away in proximity. I can get into that right in the middle, and boom, if it's going up, I'm getting $1 a tick on the way up. Okay, so there's different spreads. It's almost the same as binaries in this sense of out of the money, at the money, and in the money. There's extra premium in there. So you're not stuck with just one or the other. You don't have to only take these big premium ones. You don't have to take these negative premium ones. You can get in something that's right at the spread and we'll move $1 a tick. It's just a lot of you guys that have been turned off by spreads is because you're like, hey, I got into one, but they just don't move. The market moved like 40 points and I only made a little bit. Yeah, because you probably got into this one, which is $67 negative premium. Okay. William, if I put up 334 bucks, I only win 66. How does the risk reward work? Not really sure what you mean by that question, William. We've covered that. You're not risking 334 bucks. 334 bucks is technically risk, yes, but that's the amount that you have to put up in order to enter the trade. You're not going to let it go against you 300 points. You know what I mean? Like on this particular one here, this is on the Dow. If I'm going short selling a spread, maybe I had to put up 300 bucks to sell it. If the market comes back up and hits, somebody asked earlier, what do you mean by trailing your stop with the triangles? I'm trailing my stop with these triangles. If the market's coming down, then it comes back up and hits one of these levels, I'm getting out. And so maybe I'll be down 30 ticks. I'm not going to let it go up against me hundreds of dollars. So you'll have a stop. You need to have a trailing stop with whatever strategy or system you're using. Hey, all the indicators are pointing red, see the market's going down. Well, at some point the market's going to go down and then come up, and boom, right here when it came up, see right here, when a bar hit one of the triangles, bam, I got out. I didn't let it just keep coming all the way back up against me. I'm taking as much profit as I can, and when the market starts to tip back up, hits that trail, I'm out. Okay, so granted, let's say that I got in and it immediately went against me. Maybe the market moved back up against me 25, 30 points. So I lost 25 or 30 bucks, right? Well, okay. So I had to put up 300 bucks to get in the trade. It moved against me and I lost 30 bucks. I got out. That's all I lost. But I had a profit potential of 66 bucks. So it's actually a great risk reward. Like 1 to 2 or whatever, 2 to 1. That's great. Okay. So let's see here. Abdul, I've already said we can't get into that tonight. Okay. For those of you that are asking some questions here, we're just on a real quick time frame tonight. Let me point you to a couple places here. Okay. Because tonight this is the Nadex webinar we're doing just to cover some spreads here. Okay. Let me just check out these questions and make sure I can get them. I might not be able to go through them with you right now, but I can show you where to get your answers for you. Okay. William, does that make sense on the risk reward there? Because you're trailing your stop there. because you don't want it. You just have to remember that max. Remember we talked about that. Max risk does not mean you're really risking that. You're not going to let it go against you 300 points. You just have to put up that much to get into it. Okay. But if it goes against you a certain amount, you're going to get out. Okay, and that's why you can't be freaked out by that number of that max risk. That's just the amount they're going to put on hold to let you get in the trade. If it's going against you, you get out of it, no problem. Okay. David, are calculators available that will calculate and assess the balance between margin and premium so you can assess many spreads at once? I'm not really sure what you mean by that. That's what that is. I mean, this scanner does it all for you. I mean, it's all right there. Instead of using the Nadex platform, you got to go back and forth and do the math yourself. All the math is here. Okay, and something else you can do is right here. It's called moneyness. In the spread, deep in the spread. Okay. If you only want to see spreads with premium, for example, you can go right here and say a minimum and maximum. Okay. So look, see right here, I got all these spreads. Well, I only want to look at spreads with premium. Boom. It's only showing me the spread with premium. If I only want to see sell side or only want to see buy side, I can narrow down and filter out my results. Okay. So yeah, all that is right there. It does all the math for you, but you can even get into some of the advanced filters and really just narrow down exactly what you're wanting to see there. Okay. And yeah, a lot of times if you're new to this scanner, you're just like, what is this? This is just too much. Wait, what's going on? But that's what it is. It's that simple. Floor and ceiling, buy and sell, proximity, premium, risk reward. Okay. All this is, if you go over to the Nadex platform, what does it tell you? If you click a ticket for a spread, what does it tell you? Floor and ceiling, expiring at 9 p.m. Expiring at 9 p.m., floor and ceiling. You can sell it for this or buy it for this. What's on your Nadex ticket? Sell it for this, buy it for this. Max loss, max profit. That's right there, max loss and max profit. All the scanner is adding in for you is putting them all on one page, letting you see the proximity from the current underlying and the premium. It's just popping in the math for you. It seems really complex when you look at it. All it is exactly what you're looking at on the ticket, plus 2 more lines of information with the math done for you. And that's really it. Okay. So all right. So let's see here. I'm just checking out a few questions here. Like I said, we can't get into all of them tonight, but I want to make sure I show you where you can get them answered. All right, so that's that. With a big premium, will it take longer to start making it $1? Yes, Zachary, with the bigger premium, it will take a little bit longer to start seeing that. But then when you get closer to expiration, it'll start moving super fast because you've already got a ton of extra money built in there. It'll start moving super fast, much faster. Edward, so which one in the money spread to buy? Well, we talked about that. It just depends on your strategy or system, how long you want towards, to expiration. Susan, I really liked your premium collection strategy on binaries. What is the best way to do that with spreads? Susan, if you hop over to the Apex website and you go, okay, some of y'all were asking about this chart that I was showing here. What does that mean? And what is the entry? What are all this? Okay, hop on over. We can't get into that tonight, but hop on over right here to the Apex website. Go to the Apex Elite Room and Tools. Right here, step-by-step courses, and it's right there. The iZone Sharpshooter course. Walks you through that whole chart, what each one means, how to use it, entries and exits, and so on. Susan, in a nutshell, it would be pretty much the same. I would use the iZone Sharpshooter, following those entries, looking for spreads that had premium in them with the shortest time as possible. You're not going to find huge premiums on spreads with only 10 or 15 minutes to go like you do on the binaries. Okay, you might need a little longer time frame than that, you know, maybe even an hour. But it's basically in a nutshell the same. Look for a spread that's got that premium in it, and you don't have a super long time to expiration, and you're taking the iZone sharpshooter entries and just collecting that premium. Okay, and it's technically a lot less risk than, you have to put up more money to do it, but it's a lot less risk than those binaries could be. Okay, or well, it's about the same, I guess, if you're following your exit strategy rules, Susan, on the binaries and getting out at the strike, you know, because that way you're only risking 25, 30 bucks. Okay. So yeah, so David, if you check out that video there, the step-by-step courses, iZone Sharpshooter walks through those entries, exits, trailing with those stops and everything. Okay. And as far as, you know, stop orders and how that works and placing orders and placing take profits and so on, if you go here and how to use the scanner, if you go here to the scanner, right here, access the scanners, right here. Do you want to use the binary scanner or do you want to use the spread scanner? And it walks you through right there how to use it. Okay. And in fact, I made a video right here. It's called Access, Install, Learn to Use the Scanner in Under 30 Minutes. You don't have to go through some long training course and all this in-depth stuff. Literally, I walk you through right here, accessing it, sign up for it, install the Google extension, how to use it, boom. As soon as we get off this webinar, if any of y'all that haven't used the scanner before, if you spend 30 minutes watching this, you'll be using the scanner tonight to place your orders and everything. And it's free to use and it's real easy to set everything up. Okay. So check that out there. Later on, if you want to go through some of the step-by-step training and get more in depth into some of the filters and behind the scenes, you can. But this right here, 30 minutes, you're up and running. You got it all. Easy cheesy. Okay. Ivor, what's the next best option for spreads when near the money daily spreads aren't available, directional trading wise? Ivor, you almost always have near the money daily spreads available. There should be very few times where you don't have them available. Okay, but if for whatever reason you didn't have them available, it's either because it's during a time when that particular market's closed and there's no spreads at all available, or it might be because the market has moved a lot and it's close to a floor or ceiling of a daily spread. That's why they're not available. In that case, you just have to wait for the next of the top hour for a new 2-hour spread to come out. Okay, because you know that every hour another spread's going to come out. Remember, we were looking at spreads earlier and we had the 6 to 11s and we had the 6 to 8s and we had the 7 to 9s. Remember? Now if we refresh that, it's now after 8 o'clock and boom, 6 to 8s are gone because it expired 8 o'clock. But now here's another 8 p.m. and we've got brand new spreads that have new spreads with one right in the middle, new one with one at the floor, new one with one at the ceiling. Okay, so you'll know that there'll be another one coming right there. Okay, let's see here. I get more success on daily spreads that are proximity close to the market. Abdul, I agree. You're always going to get, with good moves, you're always going to get the most movement as far as mimicking the market, dollar for dollar, with the daily middle spreads. Okay, as close to the money as possible, or as close to the market as possible. And what does that mean? Hey, John, you're confusing me with all this as far as directional. I don't really understand all this. I just want to directionally trade and try to get as close as I can to dollar for dollar. Like, I don't want to wait for it to move, and I don't want to be buying way wrong. I just want to get as close to I can, and you're confusing me. Okay, then you know what you want to do? Pull up the scanner, pick what you want to trade, and click one button right here under moneyness. This one right here, near the money. Okay, just do those and say, I just want to buy, and I only want the ones that are near the money, and that's it. Okay, it's going to get rid of all the sell side, going to get rid of all the craziness. Look, everything is just 1 or 2 or 2 or 2. It's real close. So you can narrow down those close ones. You're not having to deal with everything. Okay. No, Joshua, you can't buy it for plus 10. Joshua has a good question. Can you buy the premium, for example, plus 10 and sell it right after gaining the 10? No, because the market still does have to move in your direction, or it's got to get closer to expiration. Okay, like the closer towards expiration, you're going to start seeing that premium in your profit and loss. It's going to start getting closer to that floor or to the current underlying, and you'll start seeing it going up. Okay, now you can get into it and just kind of sit it out and wait that time out, and then you'll start seeing the value of it move closer. Okay, but you can't just get in and out of it right away. You'd either have to have the market move, or you've got to have time move towards expiration for that to kind of catch up to you. Okay. So yeah, to collect the premium, you need to stay in it towards the end. You don't have to hold it all the way. I mean, the longer you hold it, the more you'll get if the market's still in your favor, but you can still get out of it. But you'll see it start to move faster, and that premium actually start to be collected the closer you get to expiration. Okay. Ken, what is the optimum time to trade the sharpshooter strategy? Ken, are you talking about the iZone sharpshooter for spreads or the binary sharpshooter? Because actually either one, it doesn't matter. It's the same answer. Anytime, really. We use them around the clock. There's not really a better time. There's not really a better time per se for that strategy or to use that system. There's just better times for each market, meaning, you know, obviously during the daytime, early morning New York time is when the indices will be moving the most, and when commodities like gold and oil and silver and copper will be moving the most. You know, like those commodities, they don't really move a whole lot at night, you know. You know, some of the, like ES and TF, ideally 9:30 to 11:30 Eastern time. Now, granted, they can still move after that, and they can have big moves in the afternoon, but your best time to look at trading the indices, will have the most movement, is the opening morning session, New York time. Okay. And yes, the iZone sharpshooter system is by far the most successful consistently with trading Nadex spreads. Let's see, we'll move. Okay, Ivar, let me see if I have this right. An NTM spread that is closer to the floor, so it'll move slower. But if the proximity is low, then it can make money sooner, even if it is slower. Talking about you got it, Ivan. Yep, Ivar. I mean, in general, right close to the floor ceiling, they're going to move a little slower until they catch up there. But yes, you're right. If the proximity is close, then it's just a few ticks for it to catch up and start moving. Okay. I mean, if it's just something that's a little bit away, like +2 or +3, that's not a big deal. But if it's like 30, you know, yeah, if it's like 30 away, yeah, then you got to have some movement. But yeah, if it's not too far away, I mean, when you're trading some Forex and you're expecting a big move or a good little move, I mean, 2 or 3 ticks is really nothing. You know what I mean? So. Okay, guys, once again, this particular webinar here will be recorded. All right, questions tab, trading questions forum. Okay, if you want to rewatch this video, you can go down here. I'll have it posted here in about an hour. It'll be under watch webinars here. It'll be under newest webinars. Okay, but most of your questions that you have from anything we covered tonight, there's going to be 2 places, okay, that you want to go. Actually, right here, Nadex spread webinars. And that will be right here, the ins and outs of Nadex spreads. This will help you have a great understanding of how spreads work, gets a little more in depth into proximity and premium. Okay. The other thing you'd want to do is right here, Apex Elite tab, step number 3, iZone sharpshooter course. Okay, for those of you that had questions about the systems we use and trailing and so on. Goes through and talks about the system, the bars, setting it up, entry and exits, and then boom. You can even just watch the rest of this here. How to trade that with spreads, how to use the scanner. We talk about the simple method to choosing a Nadex spread. We talk about the small account method for choosing a Nadex spread, and how to trade premium with Nadex spreads, how to submit orders on the scanner, all using that iZone sharpshooter. So those two sections right there are step-by-step broken down videos. Those two things I just showed you right there should answer 95% of the questions that I've seen come in tonight on spreads, premium, indicators, sharpshooters, trailing stops, and all that there. Okay. Cephas, I'm not sure offhand if we have that. Let me look here. Right there. If you're in our, if you go to the Apex website and just go right here under the questions tab to the trading questions forum, Cephas, right here in the search box, just type in DOM, and we've got several different videos here about using the NinjaTrader DOM to submit orders and trail your stops, using the DOM and ATM orders inside of Ninja. There's a few different ones there that might get you what you're looking for there. Okay, so let's see here. Yes, Dan, we are actually working on that. That's actually on the list for us. Daryl and I were talking about that Friday at the end of the day. We're going to be totally redoing very soon here the strangle, straddle, condor, and butterfly videos, and I'm going to be making those into step-by-step courses. Not just videos in the forum, but they'll actually be part of an actual new step-by-step course with the quizzes and everything, because yeah, we're getting a lot of questions on those, and we need to get some of those nailed down. I'll also be doing some of the EPC stuff, and you're going to see a lot of new course stuff out here soon. So that's kind of top on the list here for me right now. So, okay, guys. Well, thank you very much. Some great questions. I appreciate you being on with us tonight, and hope to see you back again with us next Monday night at 7 p.m. Eastern Time. I'll get this webinar up and recorded. And remember, hit us up over at facebook.com/apexinvesting. You can like us and follow us on Facebook, get updates of any new trading systems, strategies, marked up charts, good tips from our trade room. We also notify you of any upcoming webinars, and you'll also get notified of when the webinar recordings are up. And I'm about to, as soon as I get this one up as well, you'll get notified on Facebook too. Okay? All right, guys, thanks so much. Have a great night. We will see you next week.